Bitcoin is a completely irrational speculation. I mean, you're just speculating on, the madness of crowds and the greater fool theory, and the fact that you think a lot more fools are out there. Gold's going to continue its uptrend. I mean, it's been trending up, since the beginning of the century or the millennium. It's been outperforming stocks over that time period.
We look at it, it's going to be a big crypto year if they keep going the way they're going. And we're still very positive on gold. You're not going to see gold prices go down much. Gold, as we see it, it's had its correction. It could go down another $100, $200 temporarily, but it'll go back up. And 200 down from 600 over 600 up isn't a lot. So it's had its correction. So gold is long term for us.
Gold bug Peter Schiff has long been a vocal critic of Bitcoin, recently labeling the cryptocurrency a fraud in an interview with CapitalCosm. Schiff argues that many Bitcoin investors are motivated by the belief that the digital asset will lead to significant wealth, creating a speculative cycle. According to Schiff, Bitcoin owners are often reluctant to sell, driven by the conviction that its value will continue to rise. In contrast, those selling Bitcoin tend to be individuals who bought the cryptocurrency years ago and are now cashing in on their profits. Schiff sees this as evidence of a total scam, emphasizing that Bitcoin's value is largely driven by market sentiment rather than any tangible or inherent value. Despite Bitcoin's impressive performance over the past decade, some even suggesting it outperformed gold, Schiff remains deeply skeptical. While he admits to regretting not buying Bitcoin in 2010, he predicts its price will continue to fall for several years. In contrast, Schiff argues that gold has a long-established history of preserving value, particularly during times of economic crisis. Unlike Bitcoin, gold is not subject to the speculative swings that characterize the cryptocurrency, positioning it as a safer alternative for those looking to protect their wealth against inflation and other economic uncertainties. Throughout 2024, gold benefited from escalating geopolitical tensions and the global shift toward looser monetary policies, setting a new all-time high at $2,790 and rising around 25% for the year. Despite short-term volatility, Schiff believes gold's consistent upward trend over time makes it a better choice for long-term wealth preservation. We will present clips from Peter's interview. But before we do, if you want more videos like this, please hit the subscribe button and turn on the notification bell for more updates. Thank you, and enjoy the video.
Yesterday, even though the Fed cut rates, it really tightened monetary policy. It let people know that fewer rate cuts are coming, and they may not even come at all. We may have to hike rates because not only is inflation higher than we expected it to be, but it's actually heading in the wrong direction. And that's something I've been talking about all year. As everybody's been talking about how, we're on this glide path to 2%, I've been pointing out that I don't think we're going to hit 2% because we've kind of run into an impasse around 3%. And that's where we've been building a base, and we're going to launch much higher from that base. So I think next year, you're going to see much higher inflation numbers. But I also think we're going to have much weaker economic numbers. So I think it's going to be stagflation, which is the one thing, Powell was asked at a press conference, what's the Fed's plans for stagflation? And he kind of laughed and he said, well, our plan is we just hope we don't have it, because they don't really have a plan. So all they can do is hope that they don't get the one thing that they're not prepared for. But, Murphy has a law, anything that can go wrong will. And we're going to have stagflation. Despite the fact that the Fed is hoping to avoid it. I think gold's going to continue its uptrend. I mean, it's been trending up, since the beginning of the century or the millennium. It's been outperforming stocks over that time period. I expect that to continue for all the reasons that the trend is there. We have pulled back. I mean, right now we're around 2,630 or so, 2,620. At our peak before the election, gold almost hit $2,800 an ounce, didn't quite get there. But, peak to trough, gold pulled back about 7%, which is not, that big considering how much it had gone up. It was up well over 30% on the year. The big decline was in the mining stocks, which actually turned negative on the year. I mean, most mining stocks are now down on the year, even though gold itself is up around 27% year to date. The gold stocks are down. I mean, from their peaks, the big gold stocks fell about 35%, with gold down 7%. So that's 7 times the decline, which is ridiculous. And big companies like Newmont and Barrick are negative on the year. They're down in 2024, even though gold is up close to 30% during this year. And so that just shows you how negative the sentiment is on gold, that people aren't willing to buy these stocks, that they're trading for less than 12 times earnings with a market multiple, PE of more than double that. So you've got all kinds of crazy enthusiasm for tech stocks and cryptocurrencies, and really irrational pessimism regarding gold. So I think that that shows you where the money is going to be made in the years ahead. It's going to be made by the people who go against the crowd and buy the gold, and more importantly, buy gold mining stocks, and people who sell these overpriced tech stocks and basically worthless cryptocurrencies, which would include Bitcoin. Appeal or the excitement around Bitcoin, I think a lot of spec money is going there and not into mining stocks. Because, yeah, it is a speculation. These are, especially the small ones. But I think it's a reasonable speculation for people to make. I think Bitcoin is a completely irrational speculation. I mean, you're just speculating on, the madness of crowds and the greater fool theory, and the fact that you think a lot more fools are out there. And maybe there are, I mean, it's hard to say. But that's what you're doing. When you're buying Bitcoin, you're just making a bet that you're not the last fool, that more people are going to come in because of the dynamic, right? The dynamic of Bitcoin is it's going up. I'm going to get rich if I buy it too. If I don't buy it, I'm going to be left out because everybody else is going to get rich and I'm going to be stuck staying poor. So you've got that dynamic where, it's not just the greed of making money, but it's the fear of being left out and staying poor. So you've got fear and greed pushing people to buy Bitcoin. Now you've got politicians trying to reward their donors by buying Bitcoin. And so that's added another element to the pyramid scheme. If you can, get the government in, because now you've got a committed buyer that is price agnostic, right? We're going to buy 1 million Bitcoin. We don't care what it cost us. We're just going to buy them. And then if you look at the bill that, the crazy bill that Senator Loomis introduced, after they buy Bitcoin, they're not allowed to sell them for 20 years. So it's like they're just taking them off the market. They're saying we need a Bitcoin reserve. Well, what's the point of a reserve if you can't tap into it? I mean, imagine if we had our strategic petroleum reserve and we said, yeah, we got all this oil, but we can't use any of it for 20 years. Like, what would be the good of the reserve if you can't tap into it when you need oil?
And you've given away all that capital to buy it.
Yeah, you've created a massive inflation. You printed all this money. But again, what do we need a reserve of Bitcoin for? I understand why we need a reserve of oil, because we may need oil and there may be an embargo. But nobody needs Bitcoin now, so who the hell is going to need it in the future? And why do we have to have a reserve of something that nobody needs?
A prominent economic forecaster, Gerald Celente, warns of the potential risks that could cause a dramatic economic shift in 2025. One of his primary concerns is the possibility of a false flag event, similar to the attacks on Pearl Harbor in 1941. He points out how the United States was initially opposed to entering World War II, with 80% of Americans against involvement. Still, the bombing of Pearl Harbor quickly shifted public opinion and led to full engagement. Celente suggests that history might repeat itself with a fabricated event to rally the nation into war or provoke an economic crisis. Celente also emphasizes that larger forces are at play driving global events, regardless of whether the person is in the White House or the Federal Reserve chair. He highlights how, after 9/11, the public quickly supported the war on terror, even in the face of unanswered questions about the real perpetrators of the attacks. He suggests that the situation could escalate in 2025 as global events continue to unfold, with the rise of gold and cryptocurrencies as protective investments. However, he remains optimistic about gold's long-term value, noting that despite short-term volatility, gold remains a reliable hedge against inflation and a safer bet for wealth preservation during periods of global uncertainty.
It's already begun, and it's just going to be a wild card that makes it official. I read very often. Let me see, it's over here. Oh, this is a great quote, by the way. Every gun that is made, every warship launched, every rocket fired signifies in the final sense a theft from those who hunger and are not fed, Those who are cold and not clothed. The world in arms is not spending money alone. It is spending the sweat of its laborers, the genius of its scientists, the hopes of its children. This is not a way of life at all in any true sense. Under the clouds of war, it is humanity hanging on a cross of iron. Dwight D. Eisenhower, five-star general, Supreme Commander of the Allied Forces, and two-term President of the United States, warning the people, and that's exactly what's happened. So the article that I don't know if it's here, that I keep reading, it's from History Today. And you could just Google it up. You could Google up and say, Franklin Roosevelt seizes Japanese assets. And what happened was that in July of 1941, Franklin Roosevelt seized all Japanese assets. Here it is. History Today, mainstream. As I said, it's already begun. There's going to be a false flag or something that makes it official.
Even if the U.S. gets out of the way.
Yes. It'll be no, if the U.S. gets out of the way, nothing will happen. And that's the U.S. Here. On July 26, 1941, President Franklin Roosevelt seized all Japanese assets in America. Britain and the Dutch East Indies. Wait a minute. Dutch East Indies? What are the Dutch doing in Indonesia? Oh, we're stealing and robbing everything. What's wrong with you? Okay. Swung into action. You know why? Because the Japanese invaded. It was in retaliation for the Japanese occupation of French Indochina. Wait a minute. What are the French doing in Vietnam, Cambodia, and Laos? And you're calling it French Indochina? Oh, you're stealing their rubber, their tin, rape, pillaging. Oh, I forgot. Oh, that's why the United States, Great Britain, and Dutch East Indies followed suit. You ready? The result, Japan lost access to 3/4 of its overseas trade and 88% of its imported oil. They only import 100%. Oh, wait a minute. You cut off all their oil and you just killed all their overseas trade. I can't understand why they bombed Pearl Harbor. That was in July and December. All right? I didn't know this until 2 years ago. I did not know that. They don't teach this. There's going to be a false flag event if this Ukraine war keeps escalating. Biden's sending more money, more weapons. And if the Israel war, they're talking about, even Trump's talking about going after Iran. If they go after Iran, this is going to be, it'll be oil prices. Well, now they're low. And again, look at the price of Brent crude. We're talking about $73 a barrel. You go back to like April, it was right about 90. You're looking at Brent crude, and it's showing you how weak the global economy is. So anyway, if war breaks out, you're going to see Brent crude go to like $130 a barrel, $120 a barrel. That'll crash the economy and blow the bubble out of the artificially propped up equity markets. Those are the things that we're concerned about. A false flag event, making something happen where the people, here, go back to 9/11. Look what was going on, the dot-com bust. Little Georgie Bush's ratings were in the toilet. Then what was the NASDAQ down, like 70% or something? 9/11 happens, but all forgotten about. Then we had that fake housing boom. Everybody forgot about the dot-com bust. That's what I'm concerned about. Again, we look at it, it's going to be a big crypto year if they keep going the way they're going, and we're still very positive on gold. Again, you're not going to see gold prices go down much. Gold, as we see it, it's had its correction. It could go down another $100, $200 temporarily, but it'll go back up. And 200 down from 600, over 600 up isn't a lot. So it's had its correction. So gold is long-term for us. But if you're going to gamble, we're gambling, we play the Bitcoin and we play the crypto game. Because that's the players that are there now. You go with the players.
Gold is expected to remain a key player in the global financial landscape in 2025, with continued support from central bank policies. The trend of central banks purchasing significant quantities of gold is anticipated to persist, driven by their efforts to hedge against inflation and currency risks. This demand has already played a pivotal role in gold's strong performance in 2024, and as central banks continue to seek safe haven assets, gold could see further upward momentum. Despite potential volatility in the broader financial markets, gold's appeal as a stable store of value is likely to grow stronger in the coming year, especially if inflation remains manageable. The World Gold Council's 2025 outlook suggests that central bank buying, often influenced by policy decisions, will remain a key factor for gold's price trajectory. Their analysis indicates that the demand for gold will likely surpass the long-term trend of 500 tons, adding additional support to the metal's value. However, should central bank buying slow down, particularly if demand falls below this threshold, it could pressure gold's price. Nevertheless, given the overall economic environment, including potential geopolitical risks and currency fluctuations, gold is expected to maintain its status as a preferred investment, offering resilience in uncertain times. Share your thoughts on experts' analysis in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.